Good morning, good afternoon, Broker Nation. Thank you for joining us today on our November episode of ARIVE Partner Spotlight. In this monthly webinar series, we invite experts from our industry to talk about topics that can help you grow and scale your business. Thanksgiving is next week, and we thought we will bring a real treat for you all today with Plaza Home Mortgage. We have co-president of Plaza, Jeff Leinan, along with two awesome brokers joining us today who are going to talk about how to work smarter, not harder. First, I want to thank Plaza for their partnership with ARIVE since June 2024. So thank you so much for all your support. Plaza is a one-stop shop for all your needs that your borrowers might have. And they also provide the operational support that you need to grow and scale your business. My name is Harish Tejwani, along with my awesome colleague Amy Hollett. We will be hosting this session today. And without further ado, I'm going to hand this over to Jeff. And before that, Amy, do you have some housekeeping announcements to make?
Yes. Hi, everyone. Just wanted to thank the whole team. We're going to have a great panel today. A lot of opportunity for some great questions to be asked and hear insights from both operational and loan officer perspective. Just want to let everybody know we are recording this, so we will be sharing this after. Probably sending it out on our YouTube channel within the next 10 to 14 days. So look for that. We'll also be sharing the recording to you via email, and I'm sure the Plaza team will also be sharing it out to all the attendees as well. So if you do have any questions, this is an open forum. Although we cannot hear you, we do want you to type your questions in the Q&A box. All of us can see those, so we can be answering them live or directly to you in the chat box. So please interact. We want to hear what's meaningful to you so we can address those questions. So with that, thank you so much, and I'm handing it over to you, Jeff.
Awesome. Thank you, Amy. Appreciate that, Harish. Thanks for the warm welcome. Let's start with a couple of introductions, if you don't mind. So Harish introduced me, Jeff Leinan, co-president of Plaza Home Mortgage, 17 years with Plaza, believe it or not. It's like 100 years in the mortgage industry, so in normal industry. So great to be here. And with me, I have Rob Maloney. So Rob, if you could just spend 2 minutes and give us a quick introduction to yourself, that'd be fantastic.
Sure, I'll give my elevator speech. Rob Maloney, like Jeff mentioned, I am with Future Home Loans, been here for approximately 5 years. I'm our COO, so some of my perspective will be maybe not from the boots on the ground necessarily, but from how we are envisioning 2026 and our goals to make our brokers as effective as possible. And to Jeff's point, just, I don't really want to say how long I've been in the mortgage business. It's been a long time.
Thanks for that, Rob. Appreciate it. And also with us is Dennis from C2. So Dennis, good morning. Thanks a lot for joining, or good afternoon. And maybe a quick brief intro for us, please.
Yes, hi, Dennis Deschaine. I'm with C2 Financial. I've been a loan officer, sales manager, branch manager, been in the industry, what is it, going on almost 15 years now. So, yeah, excited to be here. Thank you for having me.
Great. Thanks for joining us. Appreciate it. So with that, let's get right into some questions. Actually, Dennis, let's just start with you. First question is, as we complete 25 and we look forward to 2026, which is just around the corner, believe it or not, what three goals are you really focused on for next year? As you look at your business this past year and you look at the future and everything that's changing, what three things are you really focused on?
Well, I honestly just, number one, continuing to grow relationships. I think that the more relationships that you can create and grow, the more business you're going to do. The next one is obviously production. I want to continue to increase my production. I came to C2 a few years ago, and I came from a big bank where I was a sales manager. So my production, has always, kind of been as a sales manager, and before that, a branch manager at a direct lender. But now I'm have been solely focused on just building my own business. And so just continuing to grow that anywhere from, 15 to 20% year over year is kind of what I'm looking for. But and then to be honest with you, just health, making sure that I take care of myself, because I had a knee injury a few years ago, and really allowed me to kind of take a step back. And so I want to make sure that I continue to take care of myself health wise, because I feel like if I feel healthy, I do actually get a lot better business wise. So
That's amazing advice. I love that you put a personal something that you really need to do, which is take care of health, which I think is important for all of us. Because to your point, the better we feel, the more productive we're going to be, the better business people are going to be. So that's fantastic. Rob, same question for you. What 3 things are you focused on as we go into next year?
Probably first and foremost is being hyper focused on automation. We were just kind of talking before we went live. The technology that's available right now, if you're really holding yourself accountable to learn it and to actually take the time to figure out how you can leverage it. I'm doing that a lot individually, and also being in a point where I'm able to do this for the entire company, building applications to help everybody benefit from the automation that we have. If you have a better performing company, everybody benefits from it, including our brokers. We are going to continue to leverage a new platform for us, which is correspondent lending. It's something we probably should have done sooner. That's going to be a very significant focus for us in 2026. I see correspondent lending, anything that we do, we think from a client backwards, but correspondent, I think it gives us a little more flexibility in how we can approach our clients, and flexibility with structuring deals, which will hopefully be better for everybody. And growth, similar to Dennis, if you're not growing, you're probably stagnant. And I think from a loan officer perspective, we've all lived through this. You get pretty comfortable with your referral partners, and you sort of operate from this assumption that they'll always be there. Well, life happens. And so as a company, it's the same thing. We need to continue to grow. And what that means for us is growing and adding, real well-performing loan officers, growing in terms of making sure that we are providing the right support, and, all the things. So automation, correspondent, and growth.
Yeah, that's fantastic. Good questions, or good answers, I should say. That's going back to what you said, Dennis, customer acquisition. So I think that's really important growth, finding more referral sources, because as Rob kind of touched, as artificial intelligence and things change operationally, it's going to get easier, the processing. And so this industry is really going to probably become more and more focused on customer acquisition. How do we acquire more customers? How do we get more referral sources? How do we find people that we can get them into the funnel? So great answers from both of you. Rob, let's stay with you for a second, because you talked a little bit about efficiency. What are some of the efficiency goals you have specifically for next year? I know you've really dabbled quite a bit in artificial intelligence, and what couple things are you really looking at from an efficiency standpoint only as you go into next year, so that you have more time to go find more referral sources?
Right. I am amazed at the automation that we have been able to accomplish. And I'm amazed that something we did just a few months ago seems archaic, like really fast, which we could talk about for a very long time. When I think about automation for future home loans, I think about how to make a workflow design work more effectively, easier, faster, less expensive. And I think about making it very easy for the people inside of our company, especially mortgage brokers, in a world where, look, I'm going to speak for myself, but I think it's a very fair statement for almost everybody. Loans aren't easy right now. All the people like you, Jeff, that have 2.5% interest rates, and you probably have pretty decent, if you need an income document, you know where it is, and it's probably pretty straightforward. People like us, we're not exactly falling from trees. These are very, very interesting scenarios. So making it very easy to marry a scenario to a product and a lender, but not just the right not just a product and a lender, but the right lender, the right appetite for this scenario. Each lender may offer the same product, but it doesn't mean they have the same appetite, or they're going to have an account executive that's as strong. But so when I think about just automation is my biggest goal, and I am heavily holding myself accountable. Everything that I do, I need to make sure that for the person who is going to be using it as a tool, that it benefits them, and it benefits them in the way that they need it to benefit them. And I'm kind of talking like very high level and vague, but that is my goal for 2026. I can literally take a Claude prompt and put it in a software application, and it builds it for me. It's pretty amazing.
Do you have any specific efficiency goals? Like, are you trying to increase your units per, loan officer, units per processor? Do you have any kind of dialed in specific goals that you're looking to get and use automation to get there?
So I think about it right now more from an operational standpoint. Like, we have this tool like ARIVE that's great. But we have actually been able to take ARIVE and build components to it outside of ARIVE in our own hub. And I can't tell you, Jeff, that necessarily directly speaks to a one-to-one correlation that brings in more business for our brokers. But what it does is it gives them a very easy platform so that they can see the health of their current pipeline and know whether or not they need to be engaged, or do they have a high level of comfort now that they can actually go out and make these appointments without feeling like they're looking at their phone out of the corner of their eye.
Right. Good. Great. Dennis, how about for you? What is efficiency a part of your goals for next year? We talked about it a little bit already, but what type of, any specific goals that you're looking to, trying to get, 20% more units, faster processing time, things you're trying to accomplish?
Yeah, I mean, I'm a baseball guy, and my team just won the World Series, and fortunately, we have one of the greatest baseball players ever playing for us. And one of the things I heard that he does is he always asks himself, how can I make this better? I'm talking about Shohei Ohtani. And I always think about that in my own business. Like, how do I make it better for my client? Like, are they being, am I touching them enough regarding contact with them during the process, right? So that they're always in the know of what's happening. Do they, how is that being reflected to my realtors or the referral partners who are sending me the business, so that they know what's happening, with the clients that they're sending me. So I'm always thinking about that way to become, because I feel the more efficient that I become in that way with communication, how we're moving along in the process, and whether that's, hey, we just started a loan application, we've got credit, we've got their income, we've got their assets, we've got them approved, and then we get them obviously out shopping. So how is those processes along the way through, pre-qualification, pre-approval, all the way to the end of the loan closing? How is that looking for everybody that's in the process to make sure that everybody knows what's going on? So I think that's always one thing that I always think about, trying to refine, trying to get better, because you never want to have a realtor partner or a referral partner kind of second guessing on what's happening, right? You want them to know what's happening, right? Appraisal's in, underwriting's done, so on and so forth. So building systems and checklists is something that I've started to do or have done this year, and will continue to refine as I kind of move forward. That's one of the ways that I've gained a lot of momentum just in this year, just by doing that, because people, I think, are responsive to see in that they're seeing what I've been able to do just time wise.
I think you bring up a really good point, and that is we can work on our own internal processes, or each of you can work on your own processes, but we have to remember we're also reliant, at least for today, we're still relying on borrowers providing us information. So we have to make sure we're communicating clearly with them and that they're able to respond and get everything. So, I guess part of the question would be, do you kind of clarify with borrowers what type of communication they prefer? Is it email, texting, phone calls, based upon, how comfortable they are with, different types of technologies?
Yeah. Honestly, I don't, I never really asked. My system that I have set
Yeah.
up, I'm a phone call guy, so I'll always call people. And so if I don't always hear from them right away, I'll send a text. And most of the time, people respond a lot faster to text message than they do
Yeah.
anything else. So I do have a system, my CRM, where, it's texting them too, texting the agents, texting them. So I utilize that a lot to get the information that I need from them. But I'm an old school kind of telephone guy. I like calling people, but some people don't always like to pick up the phone, or they're not always available. So text is great.
Yeah, fantastic. Great. Let's go ahead and skip to slide 4, if you don't mind, Harish. And it's kind of a more of the same, but a little bit of is, what drivers, and I know, Rob, you spoke a little bit about, artificial intelligence, maybe go a little bit deeper into some of the things that you're really working. I know you specifically are really working on some product scenario situations, but maybe you could talk a little bit more about the specific drivers that you're looking to get more focused as we go into 26, and touch a little bit on, maybe you could touch a little bit on your lender relationships too, because you touched a little bit, Rob, on, looking at all types of things within a lender relationship. So quality of the account executive, your trust level with each of them. Obviously, product and pricing always super important. So, maybe you could just touch a little more on some of the things that you're really looking at.
All right. So we're highly interested from a lender perspective, and what will, I believe, create efficiency is any ability to integrate any of your ecosystem into ours. So it's more of a one-stop shop. And I don't think we're going to be saying names here, but there is a lender that has made an impact, a pretty positive impact. So we've got a pretty strong use case for this now, where we can almost complete a loan inside of our own ecosystem, originating it in ARIVE, and then actually managing the loan inside our own hub. So the AP access right now and the ability for us to integrate that into our own ecosystem is really going to make the relationship that we have with our lenders much, much more intimate, and I think easier. Now, internally, Jeff, I've got a list of projects that we probably won't even get to, but I will tell you, we built our own CRM, and we're about to roll the CRM out to our team for testing next week. We built a help desk so you can send in a loan scenario, and we have an agentic AI bot that will scrub your question, ask it better, send it off to a RAG database, vectorized database, like these terms that I never thought I would use before, but it spits out, a too long didn't read answer and a very long, more detailed answer if you would prefer. But I think the thing that is going to continue to help me be more efficient above anything else right now is, as a leadership team, we decided that we needed help with just understanding how to manage the vision and the traction of our company. And as a leadership team, we've committed to a very formalized process to set goals and to hold each other accountable to meeting them, or dropping them if they just don't make sense at some point. We've been getting by, I think, and I think this is true for a lot of younger companies, or just people that are earlier in their career, or just early in something. You get by with a lot of just instinct and hard work, but that only gets you so far. So I'm really excited about this process that we're implementing. And now that I'm going through it, and we're still in the infancies of this, I don't know why we didn't do it sooner. And I would strongly recommend everybody try to adapt some kind of process where you have a formalized way of setting goals, hitting milestones, creating to-dos for yourself, etc.
That's a really good, important point. I actually heard a couple things from you. One was using artificial intelligence. I think a lot of us use AI for writing emails and things like that. But I think one of the things that people forget is actually, from a thought leadership perspective, it can be really helpful. in creating strategic plans and things like that, you can really garner a lot of information. And although you guys are really advanced in some of your in-house processes, I think the takeaway for most people watching today is just make sure you have a process that's repeatable and that you're working towards making it more efficient. I think that's the most important thing. And work with your lenders. Make sure your lender partners are on board, and a lot of it is on their side as well, whether it's an API as you spoke about, or whether it's just making sure that you're trained together and the process is smooth and everything is working, so that the less time you can spend on administrative or loan related issues, the more time selling and marketing, right? Which is really the key. Dennis, anything else to add there from a driver perspective, from efficiency going into next year?
Yeah, so some of the things that I've already automated, the systems that I use, like the CRM that I have, I'm incorporating video, right, where it's a personal, it's a video that I'll create, for the different steps in the loan process that the client will receive and the agents will receive. Just I want to make things look a little bit more authentic as we go into the AI world, since we're talking about AI.
Love it.
I really believe in like trying to make things look a little bit more authentic, and just having an agent receive, or a borrower receive, like, hey, your loan is conditionally approved. That's great, but what can we do to make it look a little better, right? And so my system allows me to incorporate video. So just that's one of the things that I'm going to be focused on, or I am focused on, is creating some videos that will be sent out automatically when we hit those targets. And I've had some other loan officers that, in my world, that are doing that, and they seem to get really good response. So just creating a message that is, I think, authentic to who I am will help drive some of that efficiency and goals for production for 2026.
Absolutely love that. I love that in a couple of reasons. One, the authenticity part is really important. You don't want it to make it seem like it's AI created. And listen, if you're a loan officer and you're taking 10 questions a month that are the same questions, and you can automate a video to fire out, and 8 of those 10 questions go away, you just picked yourself up a lot of time. And if you continue to work through that process, you're going to continue to get more and more efficient. And I love that. I think it's a great way to get ahead of questions and to answer information in a very personable way. So fantastic. Let's go to the next slide real quick. If you don't mind. How would you rate yourself and your company? We'll start with you, Dennis. How would you rate yourself and your company on product diversity? Are you taking advantage? I think Rob mentioned earlier that there's really not a lot of easy loans hanging out there today. There's a lot of difficult products. So how would you rate yourself and your company on your ability to take advantage and make sure that you're originating every loan that can be done in this tough market?
Well, I would rate myself. That's one of the reasons why I left the big bank, is to come into this world of being a broker, is that I wanted more options, and that's what I've been able to get going to C2. I can feel like I can do just about any type of loan that's out there. So there's a heck of a lot more yeses than there are nos. So in that sense, I rate myself really high in that way. And I think I'm taking advantage of it. I mean, that's marketing, letting agents know, or referral partners know, that you can do different types of loans, from 5 to 8 units, or reverse is important. I think that's how you can grow, because you want your clients to know that you're not just conforming guy, or you're not just FHA or VA. I don't think there's anything wrong with necessarily like specializing in those programs, but I find that like my referral partners they don't just have one set of clients. So I've got to have a big, diverse products, or a lot of diverse products out there to help, kind of meet those needs.
Great. Rob, same question.
Well, we think about this, we not to answer one of your questions, I guess, early, but we generally take a look at our lender list, and we do it annually. We might need to rethink that, but It's a real double-edged sword, this one. I almost wonder if we're too diversified. It's like you want to say yes so much, and I want our brokers to have an opportunity to say yes. And I'm partly one of the reasons why we have the list of lenders that we have available to us. You just have to really be careful, right? You step into these new products that you're not as familiar with, and if you don't have a really strong account executive, you can really get yourself in a bad situation. Like what I like to say is, like, as an example, DSCR loans, they're the easiest loans that you can do until they're not. And like when they become not easy loans, they become really, really hard loans because you weren't prepared to ask the questions. So one way I like to characterize it, like part of my role is I help our brokers structure loans pretty frequently, like on a daily basis. I help them decide where it makes sense to send the loan based on, some of the nuances. Um, I also need to think about the broker themselves, right? And all of us individually, and like just be honest with yourself. How much information do you have about this new product that you were going to venture into with, potentially referral partners, listing agents, buyers and sellers? So where I'm going with this, Jeff, is I will tell them, look, you need to take this to this lender. The rate may be higher, but this account executive is going to answer the question that you just asked me, and then they're going to tell you, did you also think about these 2 or 3 other things? So when I start to think about diversification, we are extremely diversified. To Dennis's point, if you want a lot loan, we can do it. If you want the 5 to 8 thing, the reverse, like we've got all that, but it does keep me up at night a little bit when I've got a certain loan officer coming to me and they're telling me, hey, I'm doing this reverse mortgage. Well, are you really prepared? Do you understand that the different tendencies of that type of client base? But having said that, at the end of the day, we're brokers. It's our job to be able to say yes a lot more. I was in that corporate bank for a long time too, Dennis, and I feel like I said like no more most of the time. And quite frankly, it's probably why I'm not there anymore as well. I like to say yes.
Yeah, it's a great point. I think one of the things that we could probably all as originators look as we go into next year is am I taking advantage of all the referral sources? We tend to gravitate towards builders and realtors, but I know back when I was a retail originator, I had a wheel of all the potential referral partners. Divorce attorneys, financial planners, pool contractors, and I made it a point to make sure that we were hitting on all of those. And there are specific products. You mentioned reverse. Reverse is a great product for financial planners, obviously. So there has to be sort of an understanding, or at least a high level understanding of some of these products, and then it opens up a whole nother world of potential referral partners, I think. So really super great point. Let's go on to the next question. Rob, you kind of touched on this a little bit, but how often do you assess your lender list? And is there an advantage to reducing it? Would you like to increase it? What are you looking to do? Let's start with you, Rob.
Yeah, I mean, given the number of lenders that we have on our list right now, if there's an opportunity, it's probably to whittle it down. We started to really expand the lender list because, well, for the reasons we're talking about, the diversification. Like, if you really wanted to go deep with non-QM products, you pretty much needed to align yourself with a non-QM lender. Well, I mean, look, we're doing non-QM business with you, Jeff, and I wouldn't peg Plaza Home Loans is only a non-QM lender. So, some of our non-QM lenders that only do non-QM lending, we really need to take a step back and ask ourselves, what's the value, and are we kind of like spreading ourselves too thin? Because let's be honest, the more business we do together, the more potential there is to develop a really strong relationship. It's reciprocal. Yep. And you get to know your account executives better. You get to know who to call when you're in a jam internally. And, it feels very uncomfortable for me when one of our brokers, I use broker and loan officer interchangeably, sorry. When they come to me and they say, hey, like, I really need your help. I'm not getting what I need. And it's a lender we don't have a lot of experience with, but we signed up with them because they had this, flashy product, or somebody joined us and they had a relationship with the account executive. feels very uncomfortable not knowing who I can reach out to. So at any rate, I'm kind of just rambling on right now. So I told you to keep me in check. I don't know where that red light is.
Good. Now you made a couple of good points. Dennis, same question. How do you, how often I know obviously C2's got a tremendous, but then, there's always the sort of the company list, and then there's the, sort of individual broker loan officer list that you're comfortable. So how often do you sort of assess the list that you personally use?
It's usually based on, what's the level of service do I get, or I feel like I'm getting from the AE.
Mm-hmm.
Like the AE with Plaza Lori, she's amazing. She will text back, call back, like, she's just super responsive. And that's so important, because sometimes you have to get questions. I'm the type of loan officer that I want to try to do all my due diligence ahead of time on a file, right, on a loan. And so when I'm structuring it, I'm asking, I need to get certain documents, how, I want to make sure that I've got it all buttoned up, because that's how relationships end up getting, hurt, is by not doing the work ahead of time. And if
Mm-hmm.
you don't have an AE who doesn't help you with that, then it makes it really hard for me to ever trust sending a loan back to a place, if that level of assistance isn't there from the account executive.
That's a great point. We're going to talk about account executives a little bit, but I think two good points that were made there. First of all, your account executive needs to be more than just a question and answer, right? I mean, we could probably get an AI tool to do that, but they need to help you in marketing and planning. And the other good thing, you brought it up, Rob, is, I tell our team all the time, our job is to help prevent people from running with scissors. In other words, we're not just here to answer the one question. We're here to prevent the other problems that may come down the road that you're not necessarily thinking about. So we're going to ask more questions and figure out, let's make sure we're really prepared going forward, which is, I think, really important. Let's go on to the next slide, which is, have you run into surprises? You touched on this a little bit, Rob, and Dennis, we'll start with you. But, when you do use a new lender, and you're probably using a new lender for, pricing for a product that is, super glitzy, as you mentioned, Rob. But do you run into surprises sometimes, turn times, systems, policies? And what's the level of effort to try to get loans through a system that you're not necessarily accustomed to working in?
Yeah, everybody seems to do things a little differently. Oddly, and we're all doing the same kind of thing, but when I've tried new lenders or different lenders, yeah, you do run into some surprises, and sometimes it's you have to figure out, you try to navigate, like, okay, well, do I talk to the AE about this, or do I go, is there some other department that I have to talk with? And that can be the hard part, is when you're going down the road with a new lender. Does that what is it going to be like? So there's a sense of, a little bit of, blind faith there that you're going to get through it. But it can be a little tough, for sure.
Rob?
Taking a little bit of a different approach here. I mean, this isn't that uncommon, but we do have a lender concierge team. So we're trying our best to keep our brokers out of the minutia of the administrative tasks of setting up loans. And it is absolutely beneficial. It makes it easier for us to integrate with some newer lenders, and we kind of like alleviate that pain point to a certain degree. What I find is, with new lenders, there seems to be an adoption this year of platforms becoming a little more consistent. So it has made it easier. Generally, what I find is the kind of like that, the underwriting appetite and the process. The difference in, well, we don't send out an ICD until we have this, or we're not going to start balancing until this point in time. Those really create some pretty significant issues if if we're not prepared, especially because if it's a new lender, a lot of times it's a loan that didn't work somewhere, right? And so now we're trying to find another home for it. And so now we're already trying to scramble to save face. We got less time, and now we're trying to push it through this machine that we really don't understand all that well. We don't have the blueprints, so it's generally going to be the processes, the systems. Like I say, I think we've, to a certain degree, we've done a pretty good job of figuring out how to handle that. So yeah, processes.
Great. And obviously, the purpose of today is not a Plaza commercial, but I think I do have to just make one comment: is that one of our I think our greatest value adds is our product depth and our ability to offer so much with same system, same account executive. You mentioned non-QM earlier, Rob. We have a pretty extensive product, and I think is if you're reflecting on what you did this year and what you want to do next year, and you're looking at maybe consolidating down your lender list, it's important to make sure you've got the right lenders that can really check a lot of boxes and still do it with the same process, the same consistency, the same contacts. I think that's just really, really important. I don't see a scenario where we're not going to continue to do a lot of unique products in the marketplace. I don't see a refinance boom around the corner, tomorrow. So we're going to be doing some difficult loans, and I think it's important to make sure you've got a team surrounded you that can handle that. So let's go to the next question, and that is, and Rob, we'll start with you. What factors would you consider in picking new lenders, other than obviously being in ARIVE, hopefully?
Well, if we had an account executive that makes a move to a new lender and they're not in ARIVE, the account exec, and I'm going to give our account executive a plug too. Tim is a super. He's just a good human being, but he's also a really strong account executive. So people like that, if they make a move and they're not in ARIVE, I will gravitate towards them. I'll sign up just because of the account executive. If we have a new broker come on and we've got enough history together, or their production warrants signing on with a lender that they have a relationship with, that would make sense to me. And then if there's somebody that had some sort of very niche product, we've got a couple of lenders that we've signed on with specifically because they have something that, quote unquote, nobody else really has an appetite for. Those are really probably the only reasons. I'm not signing up with a lender because they've got great pricing. That great pricing is here today, gone tomorrow. And I'm probably not signing on with a lender whose system is so archaic that it just seems like it will create log jams in our machine, because we got a pretty well-oiled machine over here.
That's a pretty good comment. And so what I hear there is you're not getting necessarily dazzled by the glitz of a price or a product. You're going a little deeper and saying, is this something that's going to make sense for me, long term a little bit, right, Rob? Like, is this going to be more than just this one loan? Is this going to be a partnership? Because you're going to spend an awful lot of time and effort maybe getting that one loan through the system. You're looking for something that's going to represent more. Is that a fair statement?
Yeah. And so my background is predominantly, like my whole entire career, is sales. And so it's tough for me to hold myself accountable. But after you've gone through a few audits and you're trying to find these documents that you forgot to grab when you were, doing your own internal compliance stuff, and now you're trying to chase them down, and you're like 3 levels deep trying to find the I don't know, the wire fee schedule or something. I wish I never would have done this loan with you guys.
That's funny. Okay, let's go on to question number 9. And Dennis, we'll go back to you real quick. And just overall, how would you rate the quality of the account executives in the wholesale industry? You touched a little bit about what's important to you. Anything else you think is important to them? How could AEs learn from you to better serve, brokers, and how should brokers be, really sort of, I don't want to say underwriting their account executives, but looking at them and valuing the relationship?
Overall, I mean, so far, most of the AEs that I've come in contact with are, have been really helpful.
Good.
And like I said earlier, the ones that haven't been, and maybe that's because, I don't know. That's just the way that they do things. I don't tend to really gravitate towards those lenders or AEs. So it makes it kind of easy in that sense. Um, so what else can I say? I mean, the way that I look at things, I when I'm looking at qualifying somebody and I'm looking at, okay, who do I want to send the file to? I don't want to just, I never really want to box myself into, sending everything to one lender, because I just don't think I think that just doesn't serve the clients well, first of all. And then number two, um, I've always, when I first got into the business, I was working for a direct lender, and that direct lender, we always had to have two investors for every loan, because just in case something happened, we had somebody else to send it to. And I always still kind of think in that way. So I'm always looking at, writing notes in my file, hey, who did I, where did I price this? Who did I talk to? What guidelines are important? Because, I want to make sure that I'm sending a file to the right place. And so it's not necessarily always about price, but the AEs definitely play a factor in that. Did uh, did I go through their guidelines and make sure that there's not any landmines that I didn't see? So you have to kind of do your homework in that sense. And so for the most part, most of the AEs that I've worked with are, they're very helpful, but that's a big part of, what I do, and trying to make sure that the loans that I put together are successful.
Yeah, it sounds like that role is really important to you, and part of it is to help you maybe fill in some areas where you don't have extensive experience, especially product related. Maybe you haven't done a certain product or haven't done it in a while, and you want to bounce some
Yeah.
things off of them. So that's super helpful. Rob, anything to add on that role? I know you guys are really sort of cognizant, and it's a big part of sort of your lender choice.
I mean, I was an account executive for 7 years, so I've done the job. I've got a high level of respect for accounting executives, and my approach is, I think of it more as a true business relationship, because it is. So I look for an account executive that's a partner, and they see our success, not just in it for the money, but they really did partner with us. They're there for us when we're in a jam. They do the things that you mentioned, Jeff, as far as, educating people. I feel confident that when somebody is on the phone with them, that they're talking to somebody that's a really good resource. I think an account executive is more important than the lender, quite honestly.
Wow.
We've had relationships. Well, I'll tell you, this year we went through a situation with a lender that we've had a very long-standing relationship with, 7 years. Our account executive decided to make a move, and the experience was very poor. We went from them being our biggest lender in terms of volume, and they quickly fell down the ladder. Now we've made some changes, but it took a minute for us to find an account executive that we felt like really represented what we needed. But yeah, no, I say that very strongly. You can have a lender that has great products and has great rates, but if you don't have a strong account executive, until we get to a point where, the 2.5% interest rate holders start making moves that have less these bumpy files, which is what it is. I mean, what are you going to do? But files don't just go in and come out without, almost everything has a surprise, it seems like. And we lean on and I kind of wonder sometimes, do we lean on our account executives too much? Like, do we expect too much from these folks? But I don't know. That's just the approach we've taken, and that's how I feel about it.
Yeah, that's a really good point. I tell our team all the time that you can have a fantastic account executive and and a lender that's struggling, or vice versa, and it just doesn't work. Like, both have to fire. You have to have a strong, competent lender. You have to have a strong, competent account executive, because without one or the other, it can make it pretty difficult. So good points. I'm going to skip number 10 actually, because it kind of dives into more of the AEs, which we already spoke about. We have a couple questions. I'm going to open it up for any other questions in a few seconds, but I want to touch on just two more questions real quick, as we have a few more moments. And I think these are some things that people really want to hear. And first off is, if I'm an originator and I want to do more volume next year, what, specifically two things would or should I be looking at to say, hey, I'm gonna do these two things so that I can do more volume into next year. And Rob, go ahead if you want to be ready.
Okay. Just, you make a plan,
Yeah.
plan your day, plan your week, plan your month, have a plan. And I thought I've got so many things popping in my head right now. I think about being visible, right? And being visible means a lot of different things. It's networking, it's your social media. I don't know if anybody's been messing around with this, but Sora came out with their update, Sora 2.0. They think it's going to be like a TikTok killer. We did a presentation on Sora this week, and I got to tell you, like our loan officers are Sora masters, but our owner on my birthday, our CEO did a happy birthday Sora video for me. It's this stupid 10-second video where he's rapping and I'm vibe coding. and inside of like just a few hours, it had over 100 views. Then it's like 500 views. You're like, you kidding me? This is the dumbest thing, but it's getting eyeballs. So I don't just like being visible, I think is really important, but it's got to be consistent. If you're not consistent with it, then these one-offs aren't really going to give you much traction.
It's so funny you said that, because I actually saw a couple of those videos this week on Rob's account, and I was like, wow, these are interesting. But I remembered his name and they were in front of me, and it was very, very interesting. So good points. Dennis.
Yep, it's Sora. Yes.
Dennis, what two things?
Yeah, I'd have to agree with Rob. Visibility. I'm not great at at doing TikTok videos or any of those types of things, but I think just making sure that the clients that you're continuing to serve, those referral partners that you do have, make sure that they know the things that you can do, right? I can do DSCR loans. I can do reverse. I can, all of the things that I can do, because, things come up over as things move, or how should I say this? Things come up in their world where, they may have a client who's looking for any of those types of products. So you want to make sure that you're top of mind with them. And then I want to start working on, is like one of the things I think people should be doing is opening up, not just talking to realtors. You should be, trying to build a book of business with financial advisors and even CPAs.
Really good point. It's funny, if you'd asked me the question, I would have said probably the two that you guys came up with, which is have a plan. First of all, how many people show up on Monday morning and then start their week and their day and sort of, email will manage you if you're not careful, and it will run your life. So you have to have a plan. I personally come to work every day with 3 things I have to get done no matter what. And I don't go home until those 3 things are done. So I think it's really important that you have a plan. And the second thing you mentioned, which is connections, Rob. Connections and visibility. I'm going to put those two side and side, right? We're in a more of a digital world now where we have to be in front of people. And unfortunately, we would like to think that the past client that worked with us 2 years ago, 3 years ago, 4 years ago, whatever it may be, is going to remember us and contact us. Odds are they may not, because, their servicer has called them 30 times, or their neighbor, or they get some, they're so bombarded with information today and things that they may not even think to do it. In other words, somebody reaches out to them before they even think. Now, if they sat down and they said, hey, I need to refinance my loan, I'm going to call Dennis or somebody on Rob's team. But the truth is, somebody's contacting them before they even think about it. So we got to stay connected. We got to stay in front of everybody. I think it's super important. And with that, I'm just going to open it up real quick and see. First of all, Rob, Dennis, any last comments, parting words? Rob, start with you.
You see David Norman put a comment in here, since we're not going to it sounds like we're not going to get to that question. As far as if you're a real estate agent doing mortgage or you're a broker doing real estate, are you taken seriously on both sides of the transaction? So the question is, would you recommend this industry to a younger generation?
Yeah.
I think absolutely, because I think the lines of distinction between roles in our business in the next 5 years could look extremely different. And I think that the opportunities that will be available in real estate in general are going to be sort of like exponentially different. Jeff, you and I have talked about this a few different times. Is what will we need all of these different people involved in a transaction? Yes, you still need insurance. Yes, you still need title, etc. But are we going to get to a point where you need individual companies to facilitate all of those parts of the transaction? And I think that that's going to look very different in the next 5 years. And if not 5, then absolutely at some point.
It's a really good point. I say actually quite a bit. I say why is a $65,000 manufactured home sort of this process, and why could someone walk onto a car lot and buy a $120,000 Mercedes and drive off with it in 40 minutes? It's two different processes, and I think you're right. Over time, we may see some streamline. Dennis, real quick, any parting words?
Well, first, just thanks for having me. I really appreciate it. I'm excited for what's to come in the future. I think that we should, invite younger people, younger generation. We should be hiring those folks
Yep.
to learn our business, because I don't think it's going anywhere anytime soon. So I think that things are going to continue to get better. So I'm looking forward to 2026.
Fantastic. Yeah, it's certainly going to change, but it's here to stay, and we are going to continue to get better and more efficient. I just like to thank you, Dennis, Rob. Appreciate ARIVE. Harish, any parting words for us?
No, thank you so much, everyone. We do have a couple of questions. Maybe Jeff, one is for you. Will Plaza release a jumbo renovation loan?
Yeah, we at this time we do not have any plans for that product, but obviously we have a full extensive. I think we have 6 renovation products right now that we can handle most other renovation options.
And then the second question, probably for the brokers on this panel, Rob and Dennis, do you have any data? What lead sources work best for you guys? Is it agents, CPAs, anything else? So anything you can talk about the quality of lead sources that you have experience with?
Dennis,
Well, I'll go. So I was using a lead source earlier in the year um, for leads, but it was Redfin leads. They were great, but that's kind of gone away because of the acquisition with Redfin and Rocket. So, but yeah, that one was really good.
Yeah, so for us, I mean, I'm just thinking about some of the technology that we use. I mean, I'm not necessarily promoting these folks. These are just some of the technologies that we've used that we think are executing pretty well for us. And what's funny is each of these now are kind of like being integrated into other technology. The whole what you did 3 months ago looks different today thing is happening so fast. But My Home IQ has been a really good resource for us. It is expensive, though. Everything's relative, but it is an expensive platform. However, it seems to be very effective. Our loan officers really enjoy list reports, but that's more from a loan officer making things easy for the real estate partners. But what I would tell you, if you lead spend with somebody, we've gone through the process of really examining this over the last several months, and we're very fortunate to have been connected with somebody who's really almost more of a data scientist. And he's kind of taught me that anytime that we consider a lead spend, there's this thing called like AI visibility optimization, AIVO. Just think about it from the standpoint, do you have somebody that can actually set you up with lead spend who understands that SEO of 2 years ago isn't SEO of today? Robots, bots, they think in human structured formats. And if you are not thinking in that regard for everything that you do, I refer to them as schemas, whether it's a press release, whether it's a social media release, whether it's anything, you should have a schema that speaks to all of these robots now. And even though Google's still 95% of the search platform, Google is also AI now. It can tell you, hey, instead of I'm looking for a mortgage broker in Jacksonville, I'm looking for a mortgage broker in Jacksonville who specializes in first-time home buyers and also has experience with down payment assistance. It's a very just different approach, and consumers every minute of every day are getting much more familiar with that. And so if you're going to spend a penny on lead spend, you need to have somebody like that in your back pocket. Just my opinion, by the way. And I could be wrong.
No, those were awesome comments. As you rightly said, Rob, things change every 3 months, 6 months, but technology becoming so much bigger and better, almost every day. So thank you again, all of you. Thank you, Jeff. Thank you, Dennis. Thank you, Rob, for your time. This was a great session.
Thank
We
you.
did promise this will be a Thanksgiving treat, so you guys delivered. So we appreciate you joining us today and sharing this knowledge. And the recording will be available probably the week after next when everybody is back in December. And again, we did share the contact information of for Jeff and Dennis and Rob. So if you guys have more questions, feel free to reach out. But thank you again for your time.
Thanks,
Thank
everyone.
you.
Appreciate it.